Mark, let me start with the data of the here and now here in London, 7:43 in the morning. We've just been talking a lot about what's going on in the UK, but interesting to push this forward into the Bank of England and the gilt story. I saw Ven Ram on the Markets Live blog warning us about the asymmetric risks around market reaction to this print today. We might see that on display in 16 minutes' time then. Are you assuming that gilt yields go higher here?
Yes, well, we're already seeing that the front-end pricing is moving higher. We've kind of pushed back where rate hikes are priced for the Bank of England. And I do think this is going to be a global theme of yields drifting higher a little bit. It was interesting, in fact, that on that UK CPI print, we actually saw a little tick higher in US yields. It follows on from the RBNZ hawkish warning. It follows on from the RBA hawkish warning yesterday that you highlighted, Anna. And it's this idea that, hey, central banks are getting nervous on the inflationary path. And that's not including the fact that we've got a massive extra commodity surge since all these inflation prints, since those kind of readings came through. So therefore, there's really a dynamic out there that we might be going back into another inflationary wave. We might have passed the disinflationary wave, and that means yields everywhere. I think there's a little bit of upward pressure. I am someone who was very, very bullish yields for earlier this year. I thought yields were going to go much higher. About a month ago, I said that maybe two-year yields have kind of peaked out. I'm starting to worry about that view. Maybe even US yields have higher to go as well.
OK, yes, so the RBA, the RBNZ, all at least having conversations about higher rates. Nobody thinks that the UK is doing that right now, but it's worth thinking about where that global rate story goes, as you say. Back to stocks then, Mark, and we wait for NVIDIA, and these NVIDIA numbers dropping at a time where we've seen new records on US stocks.
Yeah, I think NVIDIA is more likely to be a catalyst for volatility rather than a turning point. I can see a scenario where, for example, NVIDIA's earnings are roughly in line, not a large enough miss. I've got to trust the equity analysts there. But their outlook might be tempering some of the optimism because this is a stock that is priced extremely optimistically. And so therefore that might find the stock market overall find it difficult to go further next week. But it doesn't mean we start a new bearishness. And that means that undervalued markets around the world can still play a bit of catch up and an overall positive dynamic in the background.